Hello everyone, this is DeLorenzo from United Asset Strategies. It is Friday, March 20th. Special day, it is my mom's birthday, but I will welcome you to another video. I wanted to take this time to take a deep breath and talk to you about the short term, the intermediate term, and the long term and what's going on here at United Asset Strategies. Over the short term, we do expect to have continued testing of support levels, meaning the market will go up and the market will come down and test again. Talked about that last week. I referred to it as a bear rally. Since we are in a bear market, this is going to continue to happen. Don't be faked out, okay? So you could use it as an opportunity to sell into the bounce. You could take an opportunity to nibble at the bottom, but it could go a little lower before it starts to go back up again. On the intermediate term, though, I think it's time that we talk about recession. You know, recession is inevitable because it's calculated as, 2 consecutive contractions in the gross domestic product, and we are going to have that. You can't have these types of layoffs that are going to happen, which started very in earnestness this week in jobless claims picking up without a recession. So the idea of the V-shaped recession comes to the discussion and decisions that will be made in answering this question. Is this a long-term economic downturn or short-term? And I believe, and so do the great staff here at United, that this is not a long-term economic problem, that when the virus passes, that our companies will rehire and we will resume and demand will come back and we'll be on our way again. We may not get right back to where we were right away, but we will resume. That's what corporations do. We make products, we sell them, and as consumers we use them. And on the longer term, let's go back to the interim term. On the intermediate term, it's during that period of time where the recession is here, the market had already sold off, the market will move ahead of us actually coming out of the recession, and that's when we'll feel a lot better that we'll be able to be buying good companies at great prices. We might nibble now, but during that intermediate phase is where we'll be putting our cash back to work. And on the longer term, it's time that we turn to the long-term cultural changes and shifts that will happen as a result of the coronavirus. It happened during 9/11, where suddenly we had new tax acts and we had, screenings at airports that stayed there long term. And now here at United, we're taking our capital and we're looking at ways that we can invest. Maybe it's technology and thermal imaging. Maybe it's, positioning some of the money into, what will be one of the biotech companies that has a cure, or maybe picking 2. So at United, we've got our short-term volatility, our intermediate nibbling away at great stocks, and then our longer-term investments into what will be a new normal. So thankfully, no one at United Asset Strategies has COVID-19, but as of today, we've finally shifted to the skeleton crew. We're going 25% in, 75% out, and we are exempt from the New York State law that mandates that nobody be here, so we're not breaking any rules, but we're going to try this for next week, and again, we started today. So we do know people that have the virus, and so far nobody is critically ill. The people are already on the other side of it. So be well, be smart, and I look forward to talking with you as you call in and send us your emails, and we'll get right back to you as always. Thank you.